Good evening, everyone. Thank you all for joining us. While we wait for the rest of the participants to join in, please feel free to download the 360TF mobile app and explore its real time features and updates on the latest happenings and its solutions. Evening, ladies and gentlemen. I am NSV Madan, and we are delighted to welcome you all to today's Business Unplugged session, a platform where thought leaders from across the globe come together to share insights and spark conversations that matters. Thank you for joining us today for what promises to be an insightful discussion on receivables reimagined, building resilience through factoring and alternative finance. Today, we are proud to bring you a compelling dialogue between two distinguished figures in the world of trade finance. Mr. Neal, Secretary General of FCI, in conversation with Ganesh Nalawade, a well known in trade finance and a driving force behind several impactful innovations in the space. Ganesh is not just the Chief Operating Officer at 360TF, he is a recognized thought leader in the domain of factoring and trade finance. With over 2 decades of experience, he has shaped institutions and platforms across India and global markets. He holds a postgraduate degree in financial management and professional certifications from the and the Digital Fifth. Over the years, he has been associated with industry stalwarts. At 360TF, Ganesh is responsible of managing the lending subsidiary at Gift City and continues to lead innovation in trade finance infrastructure. We are pleased to have him as the moderator for today's session. Now, let's introduce our guest of the evening, Mr. Neal Ham. Neal serves as the Secretary General of FCI, the global representative body for factoring and receivables finance. With more than 30 years of expertise in working capital finance, Neal has held senior leadership roles at top US banks such as Wachovia, Bank of America, and BB&T. He began his career in asset-based lending and rose through the ranks to become president of business finance at Bank of America and later led BB&T's international banking division. At FCI, Neil has played a crucial role in steering global factoring policy, having served as chairman of the Business and IT Committee, a member of the Executive Committee, and later as vice chairman. We are honored to have him with us today to share his perspectives on the evolving global factoring landscape. Before we begin with the discussion, I would like to invite our co-founder and chairman, CA Pankaj Mundra, to share a few words. Pankaj has been at the forefront of the trade finance world with over 2 decades of experience in the industry and has been leading 360TF at various forefronts like BAFT, ITFA, and ICC committees. Over to you, Pankaj.
Thanks, Manasvi, and a very happy evening, happy morning, happy afternoon to our friends across the globe. Welcome, Neil, and thank you, Ganesh, to moderate this panel today. I'm excited to see a lot of our friends and colleagues who have logged in from UK to America to Canada, and of course from India and UAE. Uh, as you all know, that Neil have a vast experience of working in the factoring ecosystem for more than 3 decades. And at the helm of affairs of FCI, I've been interacting with Neil for close to 2 years now, where we met first time in Morocco and then, of course, in Korea in the last FCI annual conference. We also had an opportunity to host Neil for a special event in India in Gift City in this year in Feb, and looking forward to meet him, Neil, again in person in our Rio, Brazil, a few weeks from now for the FCI annual conference. As all of you friends know that factoring ecosystem have evolved, and especially for India and UAE market, where uh, unlike the Western world, the overall receivable finance portfolio factoring still have long way to go. We have been new act which has been introduced few years back in India as well as in UAE. We see a lot of interest of our corporate clients to grow their exports using factoring as a solution. And we see, especially as a part of ecosystem at 360 TF Capital in Gift City, that FCI network plays a very important role to mitigate the risk of these receivables, which is most of them are based out of Western world, whether it's US, UK, Europe. And we are also happy to part of FCI as one of the key member over there to use FCI to support exporters across the globe, especially in India and UAE. So with this as a brief thought from my end, I really look forward to hear Neal and Ganesh, and with our objective that together we can make a lot of difference to the growth of exporters in this part of world. And as together as a factoring company and FCI, we play an important role to play our role in the growth of overall exports of our countries. Thank you once again, and thanks Manasvi, and over to all of you.
Thank you. Thank you, Manasvi, and thank you, Pankaj, for the introduction and the brief. So, Neil, a very warm welcome to you to the Business Unplugged Season 2. And today we are going to discuss on a subject which is really very close to my heart, and I believe yours too, Receivables Reimagined. So I know that we have a tight schedule, so let's jump into our questions. So, receivable finance and factoring, clearly it has taken the center stage in today's volatile environment. From your, experience, from your vantage point at the FCI, how do you see these tools, helping businesses manage their cash flow and navigate this economic uncertainty that's around? So, we are very keen to hear what's your view on this.
Very good, very good. Well, first, thank you, for the time this afternoon, this morning, depending on where everyone might be across the world from a country perspective, and the opportunity to really just chat through some of these conversations around, receivables finance, because as you said, we are having to manage some very interesting situations economically, politically, and ultimately both of those things have a significant impact on trade. And, for me, the biggest value that receivables finance and factoring brings to the market, and more importantly to a client, and that's what this is about, is helping the client, is a consultative approach. Getting financing is one thing, but getting a consultative, informative decision on how and where to do business is much more valuable. And that is a critical value that receivables finance and factoring brings to a corporate, to a CFO. It's not just about getting financing for working capital, but it's how to deploy that working capital. As we see these trade shifts happening right now in the market, some much faster than what we're used to seeing, a CFO, a president can speak with their bank, can speak to their financial institution and say, I need help. My trade is about to shift from one country to another. How can you help me with that? So obviously the working capital and the financing is important, but having that consultative approach from their bank, from their financial institution is even more valuable. And that is something that factoring and receivables finance brings to a corporate and brings to a CFO.
Thanks, thanks. I think the word which you use, consultative, I very much agree to it. In the past, I have seen, many a times I used to, tell the team, uh, it is not what you want to sell to your client. It is what you need to understand what is the client requirement. Otherwise, you may offer what you want to offer, but it might result into mis-selling. So it's always important to understand what the client requires and go by it. Today he may not require a product which you are able to offer, but eventually he might have that requirement, and he will always remember you for giving a right consultation. So thanks very much, Neil. Uh, Moving on, I have seen this, factoring was at some point of time seen as a last resort of financing. That's very clearly changing. More and more CFOs, they are trying to adapt factoring as their core financing strategy. So what do you think is driving this shift in their mindset? And how are they are ready to adopt factoring as a tool for their businesses?
Yeah, it's a good question, and over my what I can now say 3 decades, 30 years of experience, I go back to the first few days and years of business, and we were very manual. Receivables finance was a very manual process to manage it, to risk the fraud mitigation was very manual. It was by far the heaviest team that I had in terms of number of people to support the business, and what we're seeing over the past several decades, and 360 TF is a perfect example of this, is the technology that's coming to the forefront for finance. And that is bringing the cost of doing factoring down significantly. That now allows us as factors and banks and financial institutions to focus, again, what I talked about before, the consultative approach, right? We're able to leverage technology to bring the cost per transaction down significantly. And as that's happening, the CFOs are recognizing the consultative value that the bank and the factor is bringing to them. Before, they were worried about how difficult it was to process a transaction with a factor with the bank 10, 15, 20 years ago. With technology, with AI, we're seeing that cost per transaction go down significantly. And so for me, that's one of the reasons that we're seeing this exponential growth in factoring. One of the things that will be shared next week when we officially release all of our statistics, and I want to give one hint away positive to that, is that we're seeing that the international factoring globally for our FCI members is up 12% year over year. That's an amazing number considering everything else that's going on in the transactional world, in the economic world, that we're seeing this growth at the levels that we're seeing the growth. And I think that goes back to, again, technology, companies like yourselves bringing the cost per transaction down significantly, allowing us to be consultants.
Great. Yeah, I agree with this. Next, I want to ask you, many corporates, and with my experience, I can tell you it's not a problem with the corporates, even from a banker's point of view. A lot of times the terminologies which they use, invoice financing, bill discounting, factoring, often they use it interchangeably. So if you have to, very summarily explain, what are the key differences between these solutions, and how do businesses, evaluate what is more, suitable, or some solution that will address their requirements. What is your take on this?
Yeah, I think, when you think about products related to receivables, invoice financing, discounting of bills, bills of lading, factoring, the big difference, and it's a lot of what we've really talked about already, is it's the servicing. It's the servicing that a factor can bring to the client that you're not going to get in traditional invoice financing. You're not going to get in discounting of bills. Those products are great for cash flow, and there's something that CFOs need at different levels. But if that CFO, if that president, if that corporate is looking for service and consultation, they're only going to get that within a factoring program, because they are able to provide insight to credit decisions that are being made, countries and regions that they're selling into or should be selling into. If they want to sell into a new market, what are the risks they should be thinking about? And then more importantly, who are some of those buyers that they could start working with? Or the reverse, if they're thinking about those that they should be buying from a supplier perspective. So to me, we need to be careful using the terms interchangeably, because there is a big difference in what these products are. One is really a cash flow tool and mechanism. The other one is a cash flow tool and mechanism, but there's also the service aspect that comes along with it, and that's very valuable for clients.
can't agree with you more, Neil, and you very precisely explained the servicing part versus only the cash flow. So all products provide you cash flow, but the valuable advice is, as a factor when you work together, you are together with the businesses, you see how the payments are coming up, you advise the client what are the risks involved. And when you see that there are declines in the payment, there are delays, you need to tell your client, okay, there's some issue, probably you need to look at some other business or other buyers. So I think it's a value added service, as a factor when you work together with the businesses. Okay, the next one, what major macro or the market trends, you see are reshaping the global uh, the factoring and the receivable finance landscape today? Uh, yeah,
Well, I think I'll answer that one with the easy answer to start with, which is kind of the obvious one that's been going on, from the tariff and trade wars that have been
yeah,
happening, right? The past few weeks. But I think those just highlight a trend that's been happening for a very, very long time, and it's been happening since the existence of trade. And that is that trade is always going to shift. It is going to shift. It's going to shift to the easiest path. It's going to shift to the best path, the best quality, and lowest cost, right? So that is a trend that will always happen. Now, specifically, and I think this goes back to consultative and the service approach that our members, our banks, our financial institutions can give our corporates is an event like Peru. China over the past 10 years has really been settling itself into South America, realizing that's a very important trade corridor. They have helped build an incredible port in Peru for them to be able to access import export into South America. That's not something that's happened in the past month or two with all the trade chaos that's been going on. That's something that's been in the works for a decade. What's happened in the past month or two? Yes, does it accelerate some of that? It does. But that I think is what's so important for clients to have the relationships with their financial institutions because they know about that. They know that these trends are already happening. Things are moving. The trade from east to west is not something that's just changed in the past month or two. That north to south trade or subcontinent, intercontinent trade has really picked up over the past several years, definitely pre-COVID. So, what's important is for clients, corporates to really work with their banks, their financial institution to understand that these trends that are happening are just part of a bigger picture that have always been happening. What's important is just to stay on top of them, be prepared for them. More importantly, know the different markets that you're going to sell into. It's important to know where you're selling today. What's more important is to realize what are those potential markets in the future and what are those trends.
Neil, what we've also seen is that the adoption is growing. But even though when the adoption is growing, we still see that the access to the financing still remains uneven, and more so in the emerging markets. So, what do you think are the key roadblocks? Are they more on the regulatory side, structural, or is it more about the market awareness? How do you view this?
Yeah, and I think I would almost, take those three words in the reverse. There needs to be that market awareness of what it is and how it works. You need to show how the structure can work, and then you have to work with the regulators to make that happen. What we're seeing in India right now between the country and then obviously what's happening more specifically in Gift City is exactly that. The market is very aware of the factoring product. FCI structurally has been in India for a number of years. And now what we're seeing is an opportunity to exponentially grow the product to support trade finance in India once we get that full regulatory support. There is regulatory support there. There is a way to do the business, but there is an inconsistency in some respects as to how it can or can't be done. On the import side, There's some that believe it can be done today under the structure, the others that believe that needs to be work under the structures and the regulators to make sure it fully works and it's more efficient. So it's really important that the market is aware that it's there. It's important the structures put in place, and then getting the regulators to work with you through that process is very, very important. Just to expand on that quickly is to give an example of work that we've done in markets like Bangladesh or Zimbabwe, where we're just starting to see, their export business pick up. The regulators are very much in lockstep, with their banks as it's growing and coming together. So in an ideal world, if you can get the market, the structure, and the regulator all happening at the exact same time, you can really ramp up the business. And I think the one thing I'll applaud 360 and the other members that we work with in India on is that you've really been working together to get the market, the structure, and the regulators in sync with each other. We're not quite there yet, some work to do, but it's going in the right direction, which is really positive.
Yeah, true, very true. I think I completely agree with you on this statement. So moving on, the alternative finance, it is opening up new possibilities, but it is also throwing up, new risks. So what should businesses watch out for? How can they remain compliant while also being able to manage their operational risk?
Yeah, I think mainly it's really understanding what that alternative finance brings to them. And again, this even goes back to the servicing conversation earlier, in this conversation, that we need to make sure that that CFO, that corporate understands the value of whatever that financing is, whether it's purchase order, whether it's invoice finance, discounting, factoring, or what many people are calling supply chain finance. Understand what is that impact on your balance sheet, understand the costs fully for that program. If you are getting a alternative finance that looks cheap, right? Is that because you're also losing the consultative and the service piece, that comes with the more traditional financing that's out there? So I think it's really making sure that as a CFO, you're really educated on what that finance is, exactly how it works, and making sure that you're thinking about the total cost to you.
Right, right. I just want to add on to what you mentioned. Many a times, and specifically in the emerging markets, a lot of the businesses, they just look at the cost factor.
Mm.
And many a times, cheap is not always good. The consultative approach is missing. So you as a business might, be gullible to go for the low cost, but sometimes even if you pay a little bit more, that also gives you value add, and that will help you to, exponentially grow your business. It is not just about meeting your financial needs, but about also to grow your business, and that is
Yeah.
what should make an impact while making your decision for this. So yeah, I agree with you. Neil, the digital transformation, is seen everywhere. But what do you think is actually making, a difference in the factoring world today? There are a lot of innovations, like the AI, the digital onboarding, or there are real-time platforms. There's a new, the ITFS businesses which have come up. How do you see all of this, improving speed, and how are they able to reach, especially, like to the businesses with support from fintechs like 360TF? How do you see this?
Well, I think, first and foremost, it's cost. Although, we just talked about cost isn't always the most important thing, but, it's still a reality. Being able to bring an invoice, bring a transaction into a platform, for almost nothing, for pennies, is transformative. And again, I'll go back, and I know this is an extreme example, but, 30 years ago, I ran a small business factoring group at Bank of America, and our cost to process an invoice in our platform was 25 US dollars. And that's because of the whole manual approach, right, to get it into our platform. So having the ability to automate that process brings that cost down immediately. Now, what it then allows us to do, and I think this is the more valuable piece, and it goes back to quality and services, we're now able to put technology around that efficiency to evaluate the quality of the transaction, put some AI around it, truly eliminate fraud that we've seen in certain markets. Turkey, Chile are great examples of that, where we've almost eliminated double financing that was occurring in those markets because of the technology. And, that is something that we're really seeing this transformation because we've gone digital. And, 360 bringing a platform to the corporate, bringing it to the network drives that efficiency, right? It allows you to then focus your team on the more material parts of the business that's going to bring a bigger return to you. And the technology can handle thousands and thousands and thousands, millions of transactions, and highlight the ones and red flag the ones that really needs to be looked at with a set of human eyes. So to me, it's really exciting to see that transformation, and it's been exponential, because I go back to, again, 30 years ago, things were done extremely manual in this world. And in the past, 5 years or less, we've seen it just ramp up from a digital perspective, from an efficiency perspective, from an AI and fraud reduction in a very short window of time. It's exciting to see.
Mhm. Right, right. I'll just add some bit of my experience on this. On the India side, we had similar challenges in the past, specifically more so in the domestic side, where we were not able to verify the underlying invoices.
Mm,
Come 2017, there was a GST implementation, the tax implementation, whereby we as a financier were able to online verify some of this, the invoicing part. That brought
mm.
us a lot of, assuredness to us as a financier to see that what we are financing is really there. So yes, the technology implementation and all, it really helps. I just want to have a follow-up question on this. You just mentioned about the Turkey and Chile market. Uh, you
Mm.
you've seen the double financing has been avoided. Maybe if you just expand a little bit on that, it would be helpful to know what has happened over there.
Yeah, and it's been interesting. There's only a handful of markets that have successfully implemented a corporate registry, an invoice registry. And, the value to that is that as a finance company, you can go into the market, buy invoices, finance invoices from a corporate, and know that you're the only one that holds those invoices. You can know that you're the only one that finances that invoice. Chile, we'll use that as the example. One of the reasons it became so important in Chile is in Chile, each invoice was its own independent transaction. So a corporate could take 5 invoices to 5 different banks and finance those 5 different invoices with each one of them independently. That was good from a capital perspective, but it was bad because at the same time, you could take those 5 invoices and repeat them to another 5, and nobody knew that this was happening. So putting this kind of technology in place allows the financial institutions to know that collateral that they hold in their hand is theirs. They know that they have financed it. More importantly, they've told the rest of the community, this one is mine, I've financed it, and it protects others from duplicating that financial product.
Interesting, interesting. Well, in India, there is a similar registry in place, central registry, where the factored receivables needs to be, registered by the financiers, and
Mhm.
that gives an idea to, like, if I am a lender, I should go and check on the central registry whether this invoice or this buyer has already been offered to some other factoring company or other financier. So by 2012, the Factoring Act was introduced into India, and that is when this central registry was set up. And like you said, the central registry has 2 options. One, you can register the receivables on a whole turnover basis, or the second option is you do it invoice by invoice. So both options are available. Uh, Great. Uh,
Yeah, for me, to me, it's the single biggest innovation that any country or region can put in place to, one, protect the financial institutions, and then two, and more importantly, to promote that business, because you're creating a safe and sound environment to really
Mhm.
make that asset a protectable asset.
Right, right. So Neil, as a global network, how do you see FCI, shaping adoption, across the markets? And how can fintech platforms like 360TF collaborate with FCI to expand the responsible access, particularly the geographies which are emerging or underpenetrated?
Yeah, from an adoption perspective, in terms of what we do on a daily basis, it's really about getting out in the market and raising awareness. And most of that is done in the more emerging markets, where the product literally doesn't exist in many cases. However, what's also important is that we stay on top of the more mature markets, because we do see legislation that's brought up with the right intention, but unfortunately, it can have a negative impact on our industry. That happened here in Europe as a great example over the past few years, where the late payment regulation was being put up and potentially to been enacted. The finance groups here in Europe, the EUF, which is part of FCI, really pushed and leveraged our network to let regulators and Parliament know the negative impact that this actually would have had on the industry. So it's very important that we get adoption across those emerging markets, but it's also really important that we stay on top of what's going on in the market. Part of that is our members. So 360TF, as an example, as a member, you are our eyes and ears on the ground, for what's going on, so that we can assist and help, in those markets. From a fintech perspective, going down more of that path, what someone like a 360 or any other fintech is able to do is reach into a market, bring efficiency to a bank that may not have the technology, may not have the full resources to provide receivables finance, factoring, supply chain finance. You can use their capital, their resources to get to sellers and buyers. They can leverage a technology like yourself to really help penetrate the market.
We need, for, companies or businesses, who are considering or trying for factoring or alternative finance, what is your piece of advice? Maybe some 2 or 3 bullet points which you would want them to get right, early, to set themselves for, success.
Yeah, I think ultimately it's picking the right partners, making sure that from the very beginning, you find the right financial partner in the markets that you want to do business with, or that you're doing business with. And it goes back to, what we were saying before from the consultative approach. Don't just look for the cheapest partner that's out there. Find the partner with the experience, find somebody that knows the transaction and understands the business. Just getting the cheapest one, short term, that may save you a little bit of money. Long term, it'll cost you, ultimately. So I think that's one of the most important things, is taking your time to find the right partner that has the experience and has the team with the knowledge that you can then leverage is so important.
Right, right. Uh, Finally, Neil, for business leaders who are still on the fence, what is your message to help them see factoring as a forward-looking tool for their business, as a resilience tool, and as a tool for their growth?
Yeah, for me, it's facts, and you've heard this from coming to our annual meetings before, that I want to talk, but I also want to be able to show the reality. And the reality for trade is that when we see a market that increase their business of factoring by just 10%, so the volume of factoring in a given region or a country, if we see it grow by 10%, the effective trade in that market goes up by 1%. Right? So there is a direct correlation between the growth of factoring, the growth of trade. That ultimately means growth of GDP down the road. And there's studies that we can show also, where the higher GDP countries have a higher penetration of factoring in those markets. So that's the big picture. So now bring it down to the smaller picture, right, or the more micro picture, from the corporate, if they're looking to finance, they're looking for a resource from a finance and working capital perspective, they should really look at a product like factoring that does more than just provide you the financing for working capital. Again, it's that consultative approach. It's learning about the market. It's learning about how they should leverage that finance properly. The other advantage to financing against the receivable is you're only drawing down and financing the capital exactly that you need. If your receivables go up, your financing goes up with it. If your receivables drop down in a given season, your financing drops down with it as well. So, you're being very efficient, with your capital as well. So for me, it's look at the facts of what's out there globally, that receivables finance, factoring, supply chain, when it's used effectively, it has a direct impact on trade, on a region, on an economy. And it has that same kind of an impact for the corporate, for the president, for the CFO.
Right, Neil. So Neil, thank you so much for your insights. We do also have some questions from the audience coming in.
Oh, good.
Manasvi, would you look at the
Yes.
questions?
First of all, thank you, Ganesh and Neil, for sharing the expertise with us and sharing the insights for the trade finance with us. So I'll be reading out the questions for you that we have got from the audience. So first question is, what exciting ways can factoring support sustainable business practices for a brighter future?
Ganesh, I'll start with that one. From a sustainable perspective, it's knowing your seller, it's knowing your buyer, and the way factoring is structured, especially the way we do it in what we call our four corner model. Our banks are close to the supplier, our banks are close to their buyers, our financial institutions. So it allows the financial institutions to know the sellers, to know the buyers. And to me, that's a key part of the sustainability, is to truly know who you're doing business with. And just it feeds itself at that point.
Thank you. Moving on to the next question. What innovative training can businesses offer employees to maximize factoring benefits?
I think the main one is the credit understanding, is to realize that as you work with a factoring company, they're bringing you a service and a resource of credit understanding that a buyer is good or that a buyer is bad. The other piece to it is just the trade transaction, the documentation, making sure that the sales agreement, the purchase order, the invoice, the shipping documentation all matches. It's one of the most important parts of the transaction. So they need to be really up to speed and knowledgeable on the documentation that comes with the trade.
On the next question is, what are some unique challenges or compliance nuances in cross-border factoring, especially for businesses dealing in high risk or politically unstable regions?
Yeah, and again, I think the advantage to this is having that local partner, and knowing the foreign market, having the bank in that foreign market that can help you with that knows the region. It's one of the biggest values, to the FCI network, is that when a financial institution has a client that's buying or selling, from another market, the bank may not know, or the financial institution may not know that much about that given market. But to be able to rely on a local trusted bank, financial institution, member of FCI, that can tell you what that seller or what that buyer's risk is, and more importantly, the country or regional risk, is a huge quality, huge quality.
So would be a little personal one. From your experience, can you share a recent success story where factoring helped a business turn around cash flow challenges?
Oh, yeah, I could
Yeah.
probably several different ones. I'll use one from a vendor perspective. We had a client. This is back in the U.S. They were manufacturing garments, and 10 years prior had moved that manufacturing from the U.S. to Mexico, then from Mexico to, I think it was China at that point in time, and they were getting ready to move it to, I think it was Bangladesh at this point. And they came in, they sat down with us, and they said, here's what we're planning on doing over the next 12 to 18 months. I understand that you work with partners in Bangladesh. We would really like you to reach out to your banks that you work with, talk to them about their clients that produce this given product, and help us from an introductory perspective. And what we were able to do for our client, again from a consultative perspective, is introduce them to not only suppliers of the product they were looking for, but trusted suppliers, right? Because it was a bank that I trusted. That bank trusted a given client that we're then introducing to one of my clients, and it was really about trust. So, in that story, I could probably repeat hundreds of times, and with clients that we work with. But one in particular that was in the apparel market, and I really had followed them as they moved their offshore operations from Mexico to a China to a Bangladesh. And in every step of the way, it was that same kind of process of trust and consultation, to find that new partner for them. And at the end of the day, that helped me. It helped me make a stronger client. They needed the financing, which they came back to me for. Going back to the earlier comments about, not always the cheapest. We weren't always the cheapest, but we brought a value and a service that they wouldn't have gotten from, another just financial partner bringing them money.
Thanks for sharing this, Neil. Maybe, I would also like to share one story, and it goes quite a long back. We had a client which was a pharmaceutical company, was a very small one. They did not have collateral to offer, and because of which they were struggling with their banks. And they approached us, and what we realized was they were supplying their products to African markets, but the buyer was not the African buyer, it was WHO. And we got a very good limit for that particular client from a European factoring company. And we had a 3 years relationship with the client. The client grew its business, in such a exponential way that finally, when after 3 years, he was pressurized, or sort of he wanted to move out only because he had an options of multiple banks approaching him, and he could afford to go out. But even while moving out, he acknowledged that he could reach to this stage only because factoring provided him the much required support in the initial stages. So, for me, that was a real a good example of how clients were able to grow with this kind of support. Yeah, Manasvi, maybe you can take the next one.
Yeah. Next question would be from everyone who is attending the session here. Question is, with numerous companies offering factoring and discounting as their core solutions, what additional services can a business provide to stay relevant and maintain a competitive edge in the market? So you both may answer this question.
I'll answer from if you're talking about from a factoring perspective, what the factor needs to be able to provide, again, it's that service. It's more than just the financing. It's being able to provide, the service of the transaction, what's going on in the market. When they see a trend, I use the example from the beginning of the conversation about Peru, having insight into what's going on in the market and sharing that with your corporate is what's so valuable.
Exactly. I will use, I'll borrow your terminology, which you mentioned in the initial conversation that we had. Consultative approach. I very much liked what you mentioned. So the consultative approach is not about just doing business or selling our product, but trying to understand what is the client requirements and whether we'll be able to do it. And on the secondary side, you look at the buyer, what geographies, what support you can provide. So to be with your client and tell him or support him in taking the right decisions. That is what will really, help you as a factor.
Moving on to the last question, but not the least for the session is, are there specific innovations or models in alternative finance tailored exclusively for MSMEs in tier two or rural markets that are beginning to show promise?
I think for me, a lot of the things that we've just talked about from a technology perspective, from an AI perspective, we're able to bring the factoring and receivables product to a much smaller volume client with a much smaller, or I'm sorry, much larger number of transactions. We'll look at it within our own system, within Edifactoring, which is the system that our banks, our financial institutions use to communicate with each other. Over the past 10 years, the average transaction size has been cut in half. Our volume's going up, but the size of the transaction is getting smaller and smaller and smaller and smaller. And that's because banks are able to support SMEs in smaller volume transactions because of the technology. And again, I'll use the example I used from 30 years ago when someone manually had to take an invoice and key it into their system at their bank, their financial institution. That took a lot of time. So you could only handle the larger transaction sizes. Now that companies like 360TF have been able to automate that transaction, digitize the transaction, hopefully it's digital from the very beginning. You've made a very, very, very efficient program. And so because of that, the SME and the micro markets are now getting access to invoice finance that was not happening 5, 10, 15 years ago.
Understood. We have got one more question. If you allow me, I'll ask.
Sure, sure.
Yeah. Before serving the client or onboarding the client, how to show value in your services? What is the difference a factor create apart from financing rate?
You want me to take this up, Neil?
Yeah, please go ahead.
So basically, if you compare factoring as a product with the traditional trade financing that you do, so traditional trade financing is more focused on the client, whereas when you come for a factoring kind of deal, the focus is more on the buyer. So of course you look at the hygiene factors from a client perspective, yeah, but your focus is on the buyer. So you don't look at how financially strong the client is or the supplier is. You look at only of whether the client will be able to perform the underlying contracts that have been provided by the buyer. So you look at the buyer strength basis which you are able to provide this. So that is the key difference which I see, and maybe Neil, you want to add on something to it.
No, I agree right with you on that, 100%.
Mhm. Manasvi, we have more questions? Or
It's done. It's done. Now I would like to invite Ms. Binita Shah. Over to you, Binita.
Thanks, Manasvi. Thanks a lot. Thanks, Neil. Thank you for joining us and sharing your valuable insights. It was a great discussion. One key takeaway that I know we all are going to take is the consultative approach you highlighted, which is a key of the entire scheme of the things that we have it in hand for us and for everyone who is even listening to us. We are aligned and ready to support and shadow them in the journey ahead. So waiting for the exciting days ahead. Pankaj, if you would want to add anything.
No, thanks, Danita, and once again, thanks, Neil and Ganesh, for the very, very interesting session. I just saw a question come over here. Maybe Neil, you want to answer that as that how much percentage of business by 2030 of the global factoring volume will be done by bank versus non-bank finance company, stroke factoring, stroke fintech. So today, of course, we all know that globally bank will have the maximum share of the pie, but the way fintech like or factoring company like 360TF have born, where you see the market is heading versus bank versus non-bank finance company from the market share perspective by 2030.
Yeah, I definitely see a shift. There's no question, and we're seeing it right now. In certain markets, there's pockets of South America, as an example, where we're seeing some fintech companies that have really grown relative to banks from a finance perspective. So it's definitely going to increase. I think one of the questions is going to be over time. Do some of these banks try to mirror or emulate, some of this technology at some point? But I think where there's a huge advantage for the fintechs is those smaller banks, all those smaller banks in all the different countries that just don't have the resources to provide receivables finance. The fintechs can come in and consolidate that business right together to then take it, especially cross border. So, that's where I see the growth opportunity, is that consolidation, or not consolidation, but the bringing together of that business that's coming from those smaller players across the market.
Yeah, no, thank you so much. I think that's quite encouraging, and I think that is the way it is also there for other asset class, be it retail
Yeah.
industry or be it working capital or mortgages and others, where the fintech and the non-bank finance companies taking over the market share. But definitely, indirectly, the banks are supporting with the liquidity, because ideally, technically, all these factoring companies get their liquidity from the bank. So in that sense, banks are not out of the pocket. In fact, maybe their return on equity is increasing, because without any cost they are lending to these large ticket transactions to the banks, to the finance companies. So in that way, the deployment is happening through these factoring companies and fintech, with a, I will say, lower cost, because the cost is being shifted to the books of the factoring company. No, this is fantastic, and again, it was a great interaction, and I'm glad I've got to know that this time India has got a larger representation of guests coming into FCI Rio Brazil conference. So really looking forward to that, and I'm sure maybe we have a few more guests get added today from this webinar, who may have probably got that excitement to join us. Similar discussion maybe, in Rio, but with a larger sort of a, the know-how and the brains in the room over there. But really looking forward, and wishing the FCI team all the best for a successful conference.
Thank you very much. Thank you.
Neil, thank you for your time and the valuable insights today. And I truly enjoyed, having this discussion along with you. Thank you so much.
Thank you. I did as well. Thank you.
Thank you,
We
Neil.
just
Thank you
want,
and the entire FCI team.
yeah, we just wanted to extend our heartfelt thanks to the esteemed panel for sharing their insights and expertise during the webinar with us. Your contributions truly enriched the discussion and made the session impactful and engaging. Thank you to all the attendees for your enthusiastic participation. We hope the session provided valuable takeaways and inspired new perspectives in the world of trade finance. Now, get ready for the fourth episode of season 2 of our Business Unplugged series featuring Mark S. Mandula. Mark your calendars for 20th June, same time, same place. See you there. Have a great day ahead. Thank you, Ganesh. Thank you, Neil. Thank you, Pankaj. Thank you, Vinay, for joining us.
Thank you.
Thank you
Thank
to
you.
all the attendees.